Has the American dream finally died? Are you more confused than ever about today's economy? Have you taken the right financial steps to having financial stability by finally having stable income, reducing your debts? Are you now ready to take that plunge into the world of investing just to be emotionally and mentally stuck? Has the economy and the world changed so fast that you're getting analysis paralysis? Questions that you may be asking yourself: where should I invest? Stocks, bonds, mutual funds, gold, crypto, or real estate? Everybody has an opinion, and someone is always willing to take your money. In this video, we are going to examine real estate. Hopefully this video will give you a clear, objective look at this asset class. Let's start by taking a step back and simplify the basic definition of real estate. What is real estate? Real estate is private property in the form of a building and land. Real estate can be used for residential, commercial, or industrial purposes. You may be thinking, at least real estate is something that I understand. Everybody needs housing, and it seems to have the easiest learning curve. Before jumping into any real estate investment, let's answer these questions. Is real estate still a good investment? Should I invest now? Isn't there a housing bubble? Should I wait for a crash? Will there be a need for real estate in the future? What does real estate offer me as an investor? What about the cost and the interest rates? More importantly, will this work for me? In order to answer these questions, we must first examine the benefits of real estate. We're going to specifically focus on single-family residential homes. Single-family homes give you 5-to-1 leverage, making it one of the most attractive investments available. 1. Leverage. Banks require you to put down 20% for a down payment. The bank will give you 80% to fund your investment. All other assets require you to put 100% of your money into the investment. For example, you purchase a $100,000 home with a down payment of $20,000. The bank will finance $80,000. We'll explain how you will pay 0% of the $80,000 owed on that loan in the next example. 2. Amortization. This is the process of paying down your loan over time. In the previous example, $80,000 is owed on the loan that the tenant will pay down for you. Total cost of a $100,000 home is $20,000 for the investor. This is the process of using other people's money to buy assets that other people pay back for you. 3. Appreciation. Over time, the value of the home will increase. Historically, real estate typically doubles every 20 years regardless of any market cycle experienced. The $100,000 initial purchase of the home should be valued at $200,000 after 20 years. 4. Depreciation. This is the process used to deduct the costs of buying and improving a rental property. Other tax deductions include mortgage interest and operating expenses such as property management, maintenance, vacancy, insurance, tax, and utilities. This greatly reduces the tax on any taxable income throughout the year on the property. 5. Cash flow. This is the most important aspect of real estate investing. We invest for cash returns. Your net monthly cash flow is the rent minus the mortgage payment. For example, a $100,000 home equals $1,000 rent per month. A $500 per month mortgage payment gives you a net monthly profit of $500 a month. 40% of the monthly income can be set aside for future expenses, creating zero expenses out of your pocket. You can also apply the remainder of the money to put towards a personal expense, such as a utility bill. I know what you're thinking, this all sounds great, but all I accomplished was paying one monthly bill. Your true financial reward is time. An added bonus is that real estate works well during inflationary times. Inflation is when prices rise and the purchasing power of a currency drops. It simply means that you can buy less with your money than you could in the past. The purchasing power of the dollar has been declining for decades. As we earn and make money, we need to convert our dollars into assets that increase over time. Here's a visual image of the decline of the purchasing power of the dollar over time. Now here's a graph of the housing prices over the decades. Home prices continue to rise with inflation, making it a good hedge against inflation. Now that we've determined the true value of real estate, what should we look for in a good investment? If you try to do everything on your own, make sure to practice patience and have a complete understanding of the deal before making any investment decisions. If your hectic lifestyle keeps you from investing the time to put into finding good real estate deals, then maybe a reputable turnkey provider might be your best option. Turnkey providers are companies that buy houses, fix them up, then resell them as turnkey investments for profit. The keys to successful turnkey investments are trust. Once again, trust is most important, as well as proof that they can provide what they say, having a level of patience to find a home that works for your goals, and understanding the terms of the deal. Next, build a team. Find lenders for financing. Find a full-service property management team. Asset protection by use of an LLC. This will greatly reduce personal liability. Find a tax advisor who is familiar with real estate investments. Find markets with strong stability and growth. Middle-class neighborhoods tend to have less headaches and provide the best tenants. 1 to 4 unit homes, preferably single-family homes which tend to have less tenant turnover. With real estate, you can win in multiple ways. Rent increases over time. Even better, time will give you tax-free money that you can use for future investments by way of a cash-out refinance or a home equity line of credit with a bank or credit union. These loans will allow you to take out 60 to 80% of the home's value at the time of the loan request. This is a great way to acquire more properties. $0 out of your pocket to buy more cash-flowing real estate. This is how wealth is built. Wealth is financial freedom, and this can be achieved in 10 years or less by buying just 2 houses per year. Money loves speed. However, you can go as fast or as slow as you want as long as you stay consistent with your ultimate goal. For example, if you were able to purchase 20 homes in 10 years or less, you can sell 10 of the homes and pay off the remaining mortgage on the 10 properties still owned. An example would be $1,000 per month of rental income times 10 homes equals $10,000 per month or $120,000 per year. You have replaced your earned income and achieved financial freedom. This is just one example of wealth building through real estate. If you're interested in learning more about this process and want great proven professionals to help you along your financial journey, go to Mason Institute and let's begin. These professionals have helped teach and guide thousands of people to start their journey to financial freedom regardless of age, education, or income. All you have to do is follow the proven steps of people that have come before you.